Hello, I'm Wesley LaRue, Director of Planned Giving at the University of Memphis. On behalf of the university, we hope you and your family are safe and well. Many of our donors and friends are affected by the pandemic or know others who are. You may be weighing the impact of a gift to the university that you've arranged or are considering. We want you to know how much we appreciate your support during these challenging times. Joining me today to talk about the benefits of some recent tax changes is Dr. Hannah Smith, Assistant Professor in the School of Accountancy within the Fogelman College of Business and Economics. Hannah joined the U of M this fall after completing her PhD at the University of Tennessee and being on faculty at San Diego State University. Her research and teaching focus on all areas of taxation. As a native Memphian, she is proud and excited to be part of the U of M community. Welcome, Hannah.
Thank you, Wesley. I'm happy to be here.
Earlier this year, Congress enacted the Coronavirus Aid, Relief, and Economic Security Act. The CARES Act, as it's commonly known, includes expanded charitable giving incentives. Tell us about the key aspects for individual taxpayers.
The CARES Act provides a great opportunity for tax-efficient charitable giving this year. Tax-efficient charitable giving maximizes the benefit of the gift to the university while minimizing the out-of-pocket cost to the donor. There are three pieces of the act that impact our donors that I want to talk about today. The new universal charitable deduction, the increased charitable deduction limit, and suspended RMDs for 2020. First, let's talk about the one-time above-the-line deduction. This is a brand new $300 deduction that taxpayers can take for charitable cash gifts. This is an amazing opportunity for donors who don't itemize their deductions. With the big tax law change at the end of 2017 that expanded the standard deduction, many taxpayers stopped benefiting tax-wise from charitable donations. However, this one-time $300 deduction allows donors to take a $300 deduction without having to itemize. So now I feel like I'm teaching my tax class here, but let's put these numbers in action. So let's say that you're in the 32% tax bracket and you give $300 to the university this year. Well, because of the CARES Act, you now save $96 in taxes, meaning your gift benefits the university at $300, but it only cost you a net $204. So the second piece of the CARES Act that's helpful to our donors is the expanded AGI limit for cash donations. Without this, donors who itemize their taxes are limited in taking an itemized deduction of 60% of AGI. While this may seem like a lot for most of us, for retired people who do not necessarily have much income flowing in, the 60% of AGI limit is reached quite quickly. The CARES Act allows for 100% of AGI itemized deduction for charitable cash giving this year. And finally, I just want to briefly mention the suspended required minimum distributions, or RMDs, as we call them, for 2020. RMDs are minimum amounts that taxpayers must distribute from their IRAs once they reach a certain age. The CARES Act suspended RMDs for 2020, meaning taxpayers no longer have to take anything out of their IRAs if they don't wish to.
Well, it sounds like most donors will receive tax benefits from the CARES Act, but you mentioned that required minimum distributions are suspended for this year. Can donors still use retirement assets to make tax-wise charitable gifts?
Taxpayers may still make a qualified charitable donation and bypass recognizing taxable income on IRA distributions. Doing so this year, even though RMDs are not required this year, could lower future RMDs, thus lowering future taxes, and will allow your gift to have an immediate impact on the university.
That's great. Is there anything else you need to know about tax planning in 2020?
Absolutely, absolutely. One of my favorite charitable planning tax techniques is donations of appreciated stocks. The RMD stuff I just mentioned exclusively affects retired people, and many of us want to help out the university now before we retire. The first two CARES Act provisions I spoke about were in regards to cash gifts only. However, donating appreciated stocks is an amazing way to maximize the benefit of your gift and minimize the out-of-pocket cost to you, the donor. We've had a lot of volatility in the market this year. When we have volatility in the market, this means lots of movement, so lots of ups and downs of stocks. If we happen to own a stock that has gone way up in value over the years, or just over this year alone, we could be subject to fairly high capital gains taxes on that increase in value of our stock if we were to sell the stock. However, instead of selling it, we could give it to the university directly and never have to recognize those capital gains. So let's do another example here. So let's say that we bought some stock 10 years ago for $1,000 and it's done amazing and it's now worth $11,000. Well, we would likely be subject to about $1,500 in taxes if we were to sell that stock. However, if we were to give that stock directly to the university, the university would receive an $11,000 benefit, but it also would have saved you $1,500 in capital gains taxes and potentially up to another $3,500 in regular ordinary income taxes via an itemized deduction. And these numbers could be even higher if you're in a higher tax bracket.
That's great. This has been really great information. Thank you for joining us today to share your expertise, Hannah. At the U of M, we know you have important priorities, and your health and those you care for come first. When you're ready, we will be here to help you create a charitable gift that meets your family's needs and allows you to build a legacy at the U of M, supporting future generations of Tiger students. Thanks for joining us. Be well and go Tigers.